morning, everybody. Welcome to State of the Market. We are going live with Mark in 5, 4, 3, 2.
Good morning, everybody. Good afternoon to my friends across the pond. I hope everybody's doing great. I am Mark Sebastian. I am your only option. It is a dark and rainy day here in Austin, Texas. As we open the show, the S&P 500 is up about 60. The Qs are up about 1.1%, and the Dow is up about 300 points. Welcome to the State of the Market, everybody. As I said, I am Mark Sebastian. I'm the founder and CEO of Option Pit. Today, we're going to be breaking down earnings. We're going to be looking at Apple. We're going to be looking at what happened with the oil stocks. We're going to be talking a little bit about bonds, and then we're going to be talking a little bit about Anthropic. So it should be a fun session today. I'm really looking forward to this time that I have with you guys. So let's dig in, and let's start with these Apple earnings because they were phenomenal. As we open the show, Apple is up about 5%, 4.85%, $13, $285 a share is where it's trading. If it closed here, this would be almost a new high. Its all-time high close is 286.19. So we are bumping right up against it. They are seen huge iPhone sales in all over the world. China sales are picking up a little bit. The big one is Mac. Macs are apparently very good for running standalone AI. And so they saw a big boost in Mac sales as well. Heading into this earnings, the market was pricing in about a 3.3% move. That would have been a 3.7%. That would have been, toward the low end. The long-term average is about 4.25%. And as we're talking right now, it's moving over 5. So this is one of the ones that is strongly outperforming its earnings. That's a pretty big deal. And with Apple having a new CEO, I'm kind of excited. I know you guys have heard my arguments around Tim Cook before, but I think the big problem with Apple, why it's been leapfrogged by Google and by NVIDIA, is that they stopped innovating. They've got the phone, they have the Mac, and that is about it, and services. But services come from your phone. So they have not really come up with anything truly interesting in years. They had kind of an AI before there was AI in Siri, and they've kind of done nothing. They skipped the investment and said, we'll outsource it. I personally think that was a mistake. But Tim Cook, I will say this. He is an excellent financial engineer. What they did with borrowing when rates were dirt low to buy back their own shares, what he's done with dividends, what he's done with all the moves he has made to increase value to shareholders in the near and intermediate term has been phenomenal. The long-term investment piece, I question. And so the new CEO is a hardware guy. He is a hardware guy. And so I am really interested to see whether or not this dude decides that he wants to start building again. Because I think for Apple to make another leap and not just become, range bound, a good store of wealth, but not the growth engine that it was from 2010 to 2023. They need to shake things up. So, Tim Cook was an excellent caretaker of Apple, but for it to make another leap and not sit here, they're going to need the new blood is needed, because Apple's worth about a little under, well, now just over $4 trillion. Google, after the move it made yesterday, is now approaching $5 trillion, and Nvidia is right there. I mean, Google and Nvidia are on top of each other. Nvidia is 4.85 trillion, and Google 4.65. Mark me now, and I said this last year. I think Google is going to end up being the most valuable company in the world, and it may be there for a long time. Second after Google, I expect to be Amazon. Amazon is in so many things. I know 2.85 trillion sounds like a lot. I don't believe it is. So we're watching these Mag 7 names. They don't really trade together the way they used to. You're going to start seeing some winners and losers out of it. And the way Apple is positioned, I'm not sure they're a loser, but I'm pretty sure they're not a winner right now. So, again, I'm excited for this new CEO. Let's see what this person brings. But if they announce that they're going to start innovating again, coming up with new ideas, I'm going to get on board. I'm going to get on board. The last thing that they tried to innovate was the watch. And I said this 10 years ago when they launched it. Watches are a pair of jewelry, right? I don't have my watch on now, but if I'm wearing a watch, I don't want a piece of, I don't want a Casio watch on my wrist, right? I want a Movado, a Breitling, a Rolex, or, something on those lines. So, and I know there are tech people that swear by their watch. And the one positive thing is we slapped it on my mom. So now that if she takes a fall, we all know about it. But that is a very, very tight segment of people that where that watch comes in handy. All right. Story 2, let's talk oil. Exxon and Chevron reported this today. And, their earnings fell a little bit. They have the disruptions in the Middle East are outweighing what they're making from oil exploding. This is a buying opportunity. I'm going to invite my friend Tim Colby here on in a second, our head macro trader. But I want to kind of share what I see first here. And then he and I are going to talk a little bit more on oil. We're going to get into bonds. And then we are going to talk about OpenAI and Anthropic. And I'm very excited about this. So Exxon and Chevron, they are down on, having earnings fall because, again, the disruption of oil leaving the Middle East from Oman, UAE, Saudi Arabia, that those two companies are so heavily involved in, kind of outweighed how much more they're making selling the oil that they're able to pull out of the United States and soon Venezuela and some of the other countries. When I look at where they're priced, I see an opportunity to buy. If you missed Hans yesterday, Hans and I just wrapped up a 3-day Great Income Reset project that we went through. We spent kind of a couple of days explaining what was broken. And then on Thursday, we walked everyone through how to fix it. And I may have been in this business for 25 years, but even I can pick up tricks or ideas. And what I'm going to be looking to do with a name like Exxon is leaps. Leaps are a great way to control a lot of shares for not a lot of money. And what do I mean by that? So Exxon, I think it's eventually going to be a $200 stock. Well, I can go out to January or, November, December, but let's look at January. I can go out to January. Now, if I want to buy 100 shares of Exxon, it ain't cheap, right? I'm spending $15,000 for 100 shares of Exxon. Exxon rallies $20. I make $2,000. That's a whopping 13%. Not bad. Or I can go in and buy the 150 calls in January, and it'll cost me $1,600. 1/10 the cost. And if Exxon rallies those $20, I'll probably get to sell these at about 30, 35. So I'll make, let's say, $1,500 on my $1,500 investment. You know, I made $500 less, but on my capital, I returned 100%, running laps around the stockholder. And Hans really brought this, it wasn't something I didn't know, but he brought this to my attention like, Mark, you should be doing this. And this is something he's done inside of Turbo Income. Fascinating thing, since we launched Turbo Income, in the last year, Hans has put on 26 Leaps trades. I mean, do you know how many of those 26 trades Hans won on?
Okay. 20.
What do you think?
22?
26 out of 26. 26 out of 26. So, it's the combo of understanding of Leaps and then the MTI, the market temperature indicator he uses to keep him in names for as long as until that market temperature indicator tells him to get out. And it helps him time when he gets in. Using that MTI and then the power of Leaps, 100% win rate. Now, I'm not saying he's going to be 100% for the rest of his life. Nobody is, right? Even Michael Jordan missed a game-winning shot every now and again. But the power of Leaps and the power of MTI combined are just a killer weapon for him. And I'm planning on using that same strategy in an Exxon and Chevron. I'm going to be looking at the MTI, and I'm going to be waiting for it to go green, and then I'm going to buy some Leaps. So there you have it, folks. If you missed the session with me and Hans, you can catch the replay. Email my team, support@optionpit.com, or call us 888-872-3301, and they'll give you that replay. Or better yet, you should just join Turbo Income and take advantage of that right now because there's more cool stuff coming through Turbo Income. But shifting back to Exxon, I want to bring on our head macro trader, Tim Colby. Good morning, Tim. I want to start by breaking down some of these oil earnings and get your take because I know oil is something you pay very close attention to.
Yes. Yes, indeed. In fact, oil. Speaking of paying attention to it, something sneaky is going on in oil right now. It is down $5 this morning on very little news. The only news is not great out of Iran. They gave back a proposal, and it's the IRNA gave it back, and it's not great. So it's kind of there's something sneaky. You know when you see the sneaky flows and you're seeing some movement and not a lot of headlines, somebody knows something. And this is breaking literally since you've been on air. It's in the last 15 minutes. I'm like, what's happening? Something's happening and I can't see it. ISM came in and it kind of disappointed. And I would have thought it had a different movement, but there's something else afoot here. Anyway, oil. Earnings, Exxon.
Yeah,
I mean,
Exxon,
they got a huge boost.
Chevron.
They got a huge boost from Iran. I mean, just think about. We talked about some of these things where when you have a business and the thing that you're selling goes up a lot, but your cost doesn't go up a lot. I mean, come on, that's a no-brainer. It's unbelievable to have that as a tailwind.
Yeah, and I think the big advantage of catching, what happened with their earnings was the disruptions out of what they're able to ship out of the Middle East actually hurt them a little bit more than they were making on the big boost. That is not going to persist. And oil, I believe, is going to stay elevated relative to where it was. We signed a deal. There's 2-3 years of investments to rebuild this thing back.
You get that, and then you have the backlog. I mean, it's going to take a while for the. I mean, this is the problem with having the straight close for this long, is that you have an elevated, like the floor of WTI is higher than it was, in January. I mean, it's ultimately we're going to see it go back down into 60 and probably sub 60, but that's not tomorrow, and that's not happening as soon as any of us would like. It's funny when you make an outrageous statement. I love when you do that. For the last 25 years, it's like fighting words. And I put in the chat there, you said two things. One, you said Google might be the biggest company in the world at some point. And I actually totally agree with you. Agree with you. I think Google is positioned to become the leader in the largest company in the world. And then you started talking about watches, and I thought, we got fighting words. I love.
I know. I see it.
Oh, the Apple Watch has been a game changer. I hate wearing it. But I can't live without it.
It's required. Where if you live in Denver, San Francisco, downtown Austin, or the Upper East Side of Manhattan, it is a required part of your uniform. You live anywhere else? Absolutely not.
It's a functional device. It's really functional. Whatever. I live and die by this thing. I actually, for a little while, could replace my phone with it. It's been pretty awesome. Anyway, I diverge. You had one statement I totally agree with, and one statement I totally disagree with.
Yes.
The comment on Hans. Oh my gosh, putting into context for everybody to understand. When you can buy a deep in the money call for a fraction of the stock price, when you have these high dollar stock prices, it is such a way to be able to get involved without a lot of decay, without a lot of volatility. When you have those strikes that are not at the money, you forego some of those downsides, option premium. When you think about options, what they're an insurance policy on a stock. And when you go really deep in the money, you don't have to pay a lot of extra premium. You just get the leverage that you want, which I think is a great. I think a lot of people think, I want to buy a stock, I'm going to buy upside calls, and really, that's not the best way to do it. It's not. I mean, yes. Are you going to buy an upside call for $2 and maybe it goes to 7 or 8? But I mean, you and I both know that's really, really tricky to do. But you buy a $10 call and it goes to $20. That's pretty darn good.
Not hard. Absolutely. Yeah. So Tim, I want to pivot. Yeah. Sorry.
No,
go ahead.
I was just going to say April was a crazy month. April, the SPX. Do you know how much the SPX was up in April?
A lot.
10%. It was the biggest month since November 2020. 6 years.
Wow.
Pretty much. And the dollar was actually down, which is pretty rare to have a big rally like that, and to have a sell-off in the dollar and have the U.S. stocks outperform. And Japan had to intervene in their currency, which usually doesn't happen unless there's a crisis.
Right.
Which I think that's kind of a paradoxical month, if you will. I did look at first of month flows because that's something I used to look at. And you want to know what's crazy? First of the month.
All right. So let me stop you there. Explain first of month flows before you start explaining what happened.
All right. So first of month, right? So you have a job and you have basically an auto deduction from your paycheck to go into your retirement account. There is a massive amount of money that gets executed on the first of the month. And it gets auto bought into the stock market. It is what people do. There's rebalancing flows where you get out of bonds and back into stocks. There's also that first of month where you have your automatic, deduction into your 401k and your IRA. And so there's an overweight of investment that goes on. I just ran something before the show because I had looked at it before. There is what's 1/20th of the days, right? Because it's one day. And it makes up the last 33 years, 25% of all the returns. If you were to buy in the end of the month and then exit you buy at the close at the end of the month, and you exit at the close of the first day of the month, you actually get 25% of all the returns of the S&P over the last 33 years in one day.
In one day?
It's crazy. It's crazy. It's actually, I think, with it in the last 5 years, it's not really worked as well. I think people have, kind of include a little bit into this, and some of the money has shifted, but it really is. I always respect the first of the, I'm never short on the first day of the month. And so that goes for today. And you look, that's a pretty good day. There was some good rotation this morning. The NASDAQ over the Russell. The NASDAQ was actually green by 0.5%, and the Russell was down 0.2. But again, it goes back to this. I think you wanted to talk a little bit on Anthropic. We can kind of circle.
Yeah, I want to get to that in a second. But one of the themes that Hans and I have been talking about is that bonds, the use of bonds have changed. Our big argument over the last 3 days was we believe the 60-40 portfolio is essentially dead. Bonds aren't doing what they're supposed to do. They're no longer that cushion, right? Like the stock market has some trouble. Bonds are there to kind of give you a hug and make you feel safe. They've stopped doing that. If you look at the behavior in March, we saw the S&P 500 sell off and the bond market sell off simultaneously. And you look at this rally that we've had, and bonds haven't moved, but have basically sat there, and stocks have gone up. You're not seeing the negative correlation that you would expect out of the bond market over the last couple of years, and that is something that I think a lot of people are going to have to get used to. What's your view on the bond market? Because with all this U.S. debt, that I think it's becoming kind of an albatross to own if you're not a central bank or a foreign entity that has a huge trading surplus with the United States.
I'm trying to pull up the rate curve. I know it off. Usually know this stuff off the top of your head, but basically when you think about what are you getting, what is the extra yield you're getting by owning the longer end of the curve? I lost my screen here. And the reality is at 3.75 or 3.5 in the overnight rate in something that basically can't go down, right? The Fed, it's not going down, those overnight rates. And you have the 30-year yield, that can go down a lot if we have problems. You could have, there's all kinds of reasons. But the reality is that the amount of risk you're taking to get extra return out there is just not, it's not worth owning that long end of the bond. My entire bond portfolio is all short duration. I don't have, this is my long-term stuff, safety, all that kind of stuff. If you think about it, what am I getting an extra percent?
Points, 2 year. Yeah, you're getting 100 basis points between the 2 year and the 30 year.
I'm sorry, but you could, the amount of capital you could lose those bonds. What is the price is 96. It could go down 5% in 3 months. We've seen some real volatility. If you look at the bonds, pretty volatile, and it's really just not. If you the whole reason to have bonds is to offset a stock portfolio. You have it as a safety. I like having the bonds because of the stocks I'm long. Let's say if you have a 60-40 portfolio, it's gotten to the point where you want money parked in bonds so that it's like cash, because I want to be able to, I want to have dry powder. And the reality is you don't want the long end, because the long end is got risk to it, whereas the short end doesn't. And by short end, I mean the 2 years, right? So that gets back to, one of the things that I've done is very much like what Hans has done. I've taken a sleeve of what I have, and I have it in trading stuff, because trading is negatively correlated. So it goes the opposite direction of stocks. When stocks are getting cranked and they're getting sold off, that's actually when trading picks up, and trading is way outperforms. And so I view that as a hedge. And so that's what kind of we're doing here at Option Pit, is that I want to have a portion of what I'm doing in trading, because it's uncorrelated to investing. Whereas bonds used to be the thing, and they're really kind of not. What's that?
Yeah, I mean, you're 100% right. At trading something like Turbo Income to replace the bond portion of your portfolio is going to be the direction I feel like everybody here should be moving toward. When we're in a bull market, trading's good. When we're in a bear market, trading is spectacular. That's what I love about trading, right? There are very few periods. Yeah. When the VIX is 9, trading can be a little bit harder. I can still squeeze out some money. I had some very, very good years when the VIX was in the 10s, right? 2006 was pretty darn great for me. But when the VIX gets into the 20s and 30s, that ramps up our opportunities here. But so I like that mindset. Replace that 40 with trading, and the most consistent and risk-averse trading that we offer here at Option Pit falls under Turbo Income. That's just another reason to get involved. Now, I want to talk about one more story, and this could be a little bit of a tease, guys. So I'm sorry. I got and you and I were howling laughing about this story on our morning call.
This is so bad. This makes me so mad. Sorry, I'm so mad about this.
All right, a friend of mine that runs a very large hedge fund. I can't reveal their name or anything like that. All right. Here's what he said to me. Just a random text. And this is one of the fun things about being in kind of the trading community is we kind of do talk to each other and we share rumors. And this is kind of some of the access that I get. And this is from my friend. He said, hey, was talking to a guy yesterday from JP Morgan, who JP Morgan gives IPOs to. For Anthropic, he had to pay a 20% straight VIG, meaning he had to pay 20% above the price that Anthropic was trading, above the purchase price to get Anthropic. So to buy $1 million worth of Anthropic, he had to pay $1.2 million to JP Morgan. Plus, JP Morgan takes 50% of the profit after the actual IPO. And then he just follows up with brutal. And then he said separately, he was offered OpenAI. OpenAI with 0 conditions. OpenAI has no demand.
The demand is gone. Nobody wants that. I mean, you use ChatGPT and then you go use Claude, and you'll know right away if you're a power user. We use at Option Pit. A lot of us are pretty heavy into the AI, using it for all kinds of things. There's just, what I found is you cannot use it to make a trading system. You can't just say, hey, go make me something that makes money, because I promise you that's going to be a bad one. But it does so much busy work and can do a lot of the stuff you don't want to do. It saves a lot of time. But Claude crushes OpenAI, and Anthropic is phenomenal. They are so focused on creating a great product and not doing something like OpenAI is busy making meme videos. Like, who wants a meme video? What are you really going to do? Like, I want a cat dancing on my front porch. Like, what am I going to do with that? But like coding, oh my God, I'm using it to code. Like,
to be fair, cat dancing on your front porch is kind of fun.
I mean, I know you use it. You use it probably. But there's no real good way to get into Anthropic, and it's one of the things that's really driving me nuts. There are a couple of ways to get in. Google owns about 15%, and Amazon owns a chunk as well. A lot. They own another. I think they're capped. What did I say? Somewhere around 15% they're capped, or 33% they're capped at, but they own a chunk right now. And so you have some of these big legacy companies who are basically like, like that's a disruptor, right? So what do you do when you got somebody disrupting you? You just buy some, right? You buy some of it. You can go ahead a little bit, but it's crazy. JP Morgan, that's such a Goldman Sachs move, by the way. It is such a Goldman Sachs move.
Just sticking it to them. But so the point is, when Anthropic goes public, it's immediately going to be, right now they don't have it valued at $1 trillion, which is crazy to me. That is going to immediately jump to probably being the third or fourth, maybe fifth most valuable company in the world. Now, the problem with buying Google or Amazon to invest in Anthropic is they're both one is 3 trillion and one is 5 trillion, and right on top of being the most valuable company in the world. Anthropic is additive, but it's not a game changer for that company. Now, Tim, you and I have a company. We're not going to tell you the name. This is the tease I was telling you guys. You and I do have a company that is so 10 years ago, before Yahoo went the way of the dodo, all the value of Yahoo was the fact that it had been an early investor in Alibaba. Alibaba represented about 95% of Yahoo's worth. You have kind of honed in on a company.
Do you remember trading Yahoo when that happened? We were on that. Yep. I was on the Amex when that was happening. That was crazy.
Yeah. You and I have a company that's in kind of a similar situation. It's not exactly the same, but there are many similarities between that setup and this setup.
Rise, I don't know his name. RYS. He put in there that ARKVX, they own Anthropic, and they do. But it's not a big percentage of what they own. And again, if you want to get in, these are some ways to do it. You buy some things that it's a small percentage, but there's one company who has, there's other companies that have a large percentage.
This one company has a big percentage. Yeah, they've got a non-material amount, and relative to the value of the company, it is a huge portion. So when Anthropic does eventually go public, or we start getting real rumors that they're going to go, this company is going to go wild. And Tim and I are going to be trading this in special situations in the next couple of weeks. So stay tuned for that. And if you're not a member of Special Situations, we've got a, you can click the link here to join. I've got my post earnings trades coming up next week. That's a great reason to join. Immediately following that, we're going to be, or maybe even with that, we're going to be digging into this company as well. And this might be the trade of 2026. I'm not kidding you guys. So if you're not a member of Special Situations, come and check it out. And we're running up against it. So Tim, I want to, what are your thoughts on the market for the rest of the day? You like us? We're up about 0.75% in the S&P, NASDAQ up 1, Apple still up $13. You like things to hold, or are we getting a little stretched here?
When you have Russell weak relative, that always makes me a little nervous. Russell is usually the small cap. It's the higher beta. And yesterday was opposite, and I feel like that was a big lift to the market, Russell being strong. Russell being weak today relative to where the NASDAQ is and the S&P, I'm not excited about it. I'm not super excited if we close on the highs. I think we get chopped. It's May Day. So Europe is closed.
It is.
Asia's off for Golden Week. Yeah. UK's off on Monday. Brazil's closed. Basically, you have a very thin market today. And it is first of the month. So it's one of those things. Just be out there, be a little mindful. There is some sneaky talk going on between Iran. There's some words going back between the foreign minister. So in a thin market, just you don't need to size up huge in the Russell being weak like it is.
We've just had like you said, a 10% run in April, and we're up another almost 1% today. I'm going to be looking personally. I'm going to be looking at my portfolio and probably taking a little bit back into cash so that I can jump in when I see a better opportunity, because I feel like most of the upside in the S&P 500. Maybe it gets to 7,300, but I feel like most of the upside in the S&P 500 has been kind of captured at this point. Tim, thanks for joining me this morning. A lot of fun, insightful talks. If you've missed Hans yesterday or the 3-day event, reach out to my team, support@optionpit.com, or call us 888-872-3301. They'll tell you all about it. And also next week, I've got my post-earnings trades that are going to be in the major tech names and banks and all kinds of fun names. And then this kind of yet to be announced Anthropic trade that Tim and I are working on. That's in the burner for Special Situations as well. So there is just a ton of exciting things happening here at Option Pit, and I'm really glad to be spending this time with you, Tim. Thanks for being here. I hope you have a great weekend.
Same to you.
Thank you.
Josh.
So for Tim Colby, our head of macro trading, I am Mark Sebastian. I am your only option. Have a great weekend. Thank you for joining me. And as always, thank you, Amin.